Today I want to talk about the blue chip consensus for the US economy. Now, the blue chip consensus is the average of the best informed economists in the US. And so the view that they provide is not only very high quality, but enormously interesting. We've heard discussion of the possibility of recession in the US next year or the year after. But really, this outlook that we look at today doesn't show that at all. What it shows is what economists call a soft landing. A soft landing is something that happens when the economy slows and unemployment goes up, but there's no periods of negative GDP growth. You don't have for example, 2 quarters of negative GDP growth, you do not have a recession. So what's happening is that the US economy is decelerating. Last year, the US economy grew by 5.5%. This year, we expect it to grow between 1.3 and 2.5%. The lower number there, very close to negative, but still in positive growth territory, is because of the very bad first quarter that we had. But next year we expect in 23 US growth to be 2.4%, the year after that 2.2%, and the year after that 2.3%. So really what's happening is the US economy, which grew by 5.5% last year, is settling down to growth between 2.2 and 2.4%. And that's kind of interesting, that long-term sustainable growth rate for the US economy, because it's higher than the sustainable growth rate in the outlook by the Federal Reserve. The Federal Reserve outlook is for stable growth in the future, around about 1.8%. If you've got a growth rate at instead more like 2.4 or 2.3, what that means is that the labour force is growing more rapidly, and that means that there's a higher level of immigration into the US than was in the Fed numbers. So what's happening is immigration is sustaining growth in the US economy, and that's keeping it in healthy growth territory. Now, the reason immigration is happening is because unemployment is so low. Last year, US unemployment was 5.4%. This year, it's expected to fall to 3.6%. That's currently where it was at the end of the last month. But next year, unemployment is expected to rise slightly, 4% next year, 4.6% the year after that, and 5% the year after that. And what that shows you, that is a soft landing, where you have unemployment rising slightly, which means there's more resources coming into the economy, and that's what allows inflation to fall. So the result of that soft landing is that CPI, which was 6.7% last year, is expected to be 5.3% this year, as the economy slows relative to the supply of goods, particularly imports coming in. Inflation then falls next year to 2.1%, 1.9% the year after that, and 2.2% the year after that. So it's stabilising about 2% inflation, because unemployment is going up because of the increase in the labour force because of immigration of the US economy. In that outlook, what happens is the Fed funds rate peaks next year at about 3% and then drifts downwards over following years. What we see not only in the US is that there's very, very low level of unemployment, which is the lowest sustained level of unemployment since the 1960s, is really the best outlook for labour demand that most workers in the US economy or in other places have experienced in their working lifetime. If we look, for example, at unemployment in Australia at 4%, unemployment in the UK at 3.7%, and unemployment right now in the US at 3.6%. Those low levels of unemployment mean that there's very strong demand for labour. Strong demand for labour means rising real wages. So that's rising living standards over the next several years in a very tight labour market. In fact, the best labour market that most people in the workforce in the United States, the UK or Australia have experienced in their working lifetimes.